Hello, I'm Benjamin Lee, and you're watching TVP World. In collaboration with the Polish press agency Business, we've organized the TVP World Economic Summit. This event brings together leading experts and key stakeholders to discuss critical economic issues impacting Central and Eastern Europe. Now, let's take a look at one of the summit's panels.
When doing research on the potential sources of growth in Central Eastern Europe, the answer seems to be simple. That is the capital markets and the development of capital markets. That's why we would like to focus now on the new role of capital markets in the region. First, strategies for attracting new investments and also public offerings in the region. That will be exactly the second topic. So the development of capital markets in the region. This is the title of it, and I would like to welcome to the stage Piotr Matczuk, President and CEO of the Polish Development Fund. Welcome, sir. Please join me at the stage. Attila Toth, Principal Director at the European Bank for Reconstruction and Development. Hello, good morning. Tomasz Bardziłowski, CEO of the Warsaw Stock Exchange. Good morning again. And Maciej Grabowski, Research Director, European Financial Congress. The discussion will be moderated by Kristen Andraszko, Senior Advisor at Princeps Advisory. Good morning. Morning.
So if you could please be seated.
Thank you.
Thank you to everyone for joining us today at the TVP World Economic Summit. And I think we'll begin what I hope to be a lively discussion and a timely one of the Central East European capital markets. I'll first very briefly introduce our accomplished panelists. So if I may start with Mr. Maciej Grabowski, who's representing the European Financial Congress, Mr. Bardziłowski, representing the Warsaw Stock Exchange as CEO, Mr. Attila Toth, a principal at the European Bank for Reconstruction and Development, and Piotr Matczuk, who is the CEO of the Polish Development Fund. Thank you very much to all of you for being here. Central East European capital markets. They're obviously a very diverse group of institutions and dynamics, but I do feel that they have one thing in common, which is this central position for driving economic growth and development in the region, or at least that's what we intend them to do. So I think we'll have an interesting discussion today. Obviously, over the last 2.5 decades, there's been a remarkable and fascinating journey for these markets. But where do we stand today, and what is the future for them, is why we're gathered here today at the Warsaw Stock Exchange. So if I can maybe first address the question to Piotr, if you would be so kind. Can you think, as one of the largest investors in Poland and potentially as a template for the region, what is your view on the current state of Central East European markets, particularly relative to peers in the broader pan-financial context and to US peers? What are some of the successes that we can be proud of, but what are the challenges that remain? If you could start us off, please.
Thank you very much. And thank you very much for inviting me to this panel. So I would like to start with sort of relating the question to the report that is very popular these days, the Draghi's report. So we learned from the Draghi's report that the European market is actually very much behind, for example, the US market, in terms of, let's say, the balance of sources of financing and the mechanism of transforming savings into investments. These two aspects are extremely important. So first of all, the European market is actually dominated by banking finance.
Yes.
And then, on the other hand, if we count all of the sort of pension-related assets in Europe, it's like twice as much as in the US, but then the value creation is much lower. So it's 3 times more in the US. So we see that there is like a structural problem here a little bit. So if we move further to CE market and to the CE region, I mean, these problems or these issues are actually even more visible. So the banking finance is like on average sort of 90%, so it's very dominant. And on the other hand, like many, let's say, sort of pension assets are under creation now, and like the pool of these assets is relatively low. It needs to be further developed. So, of course, there are some developments in the local market that are actually extraordinary in comparison to the other developments, like the Warsaw Stock Exchange, which has sort of a pan-regional role, and it attracts a lot of investors from all across the region, including Ukraine. But still, I mean, our problems here within the region are kind of deeper than Europe itself.
Touched on some very important points right there, and I think we'll elaborate on them from different points of view. So I'll, in fact, now turn the question to Tomasz, who, before taking the leadership of the region's largest exchange, has been on the front lines in transactions across the region. You have first-hand experience. Can you share some of your feeling about the successes that we've had, but how we can now translate that into an even stronger capital markets climate?
Yes, I think, and also I could refer once again to what Piotr said, that there's a big discussion right now in Europe about how to finance future European growth, especially given that Europe as such, and also our region, is somehow lagging behind US, and our region is lagging behind Europe in certain aspects. And I think it's a great opportunity right now that part of this debate are capital markets, and it's a huge opportunity also for us, for practitioners, to somehow shape this debate and using our experience to shape the debate into the fruitful solutions for those markets, because those markets, especially in our regions, they were not developing as we could have them to develop. So we already during this conference discussed the statistics related to the size of capital markets in the region and in Europe. In Poland, the capitalization of companies listed on the exchange have fallen from almost 40% 15 years ago to 25% right now, 25% of GDP of the gross domestic product, which is well below European average, which is above 60. At the same time, in Europe, actually, it has went up by 10 percentage points from 50 to 60. However, this is well below where the relative size of the capital markets in the US, which is above 200% of GDP. Yeah. So it seems that somehow in our markets in Poland and in the region, when in the region the situation looks, I would say, even less well, because like in Hungary the market cap to GDP is 18%, in Romania 13%, in Czech Republic 10%. So capital markets do not really play the role in the economy. They do not finance the economy. The economic growth, which has been in Poland fantastic over the last 20 years, mainly thanks to the EU accession and the fact that we as Poles utilize fully the benefits of joining EU with the increasing share of exports. However, those engine of growth, they will be difficult to use them in the future, and we have those huge challenges related to financing those big themes like energy transition, like digital transition, and now also defense spending. And here the public finances are also stretched to the limit, especially in countries like Poland, so we need to look for other sources of capital. And capital markets, they live from capital. You can't have capital markets without capital. So where to find capital? And this is a question which not only is valid here in the region, but even more importantly in Europe. Europe lacks risk capital, lacks capital for innovation. However, so where to find those sources of capital? And here, one big pool of capital is available in European savings. Europeans save more than Americans. The total savings of European households is above $1.4 trillion compared to $800 billion in the US. And Poles, of course, we save less. We didn't have so much time to build the savings due to our history, but Polish households save and keep their savings on bank accounts. We are number one country in a member state in the European Union in terms of the share of savings on bank accounts, just after Cyprus. So we have 53% of our savings in cash and bank accounts, compared to average of 30% in Europe, and 15% in countries like Sweden and Denmark, which are actually the leaders in terms of the capital market growth, and we'll talk about this later. We will have this discussion. So just to give you a number, and then here I stop. If we would reduce this level in Poland to the level of Europe average, would have more than 150 billion euro for investments. If you would reduce these numbers to the levels when they are in Sweden, we would have over 300 billion euro for investment just in this country.
And that would clearly be a striking opportunity. We'll come back to the house in just a moment. I'd like to turn to Attila for a moment to ask, because you have a unique perspective, having looked at the region through the point of view of the EBRD and working hands-on to develop the capital markets, where do you see the biggest challenges today? And please also feel free to share some successes.
Yes, so that's true. So in EBRD, we are working with governments, institutions, market operators, all around Europe and Central Europe and in Central Asia. So, and if you take a look at the European Union, Central European countries, I think it's very important to understand there are three main pillars of capital market development, to judge the capital market development. And from infrastructure perspective, from regulatory perspective, these countries are totally in line with all the benchmarks. The benchmark is, of course, the European Union, the Western European countries. So not so much things to do. But the third pillar, that is the depth of the capital market, that is the major problem. But the good news, it's not our own problem in Central Europe, because we share this problem with Western European countries. They have the same issues, the same problem, and because of many, many reasons. We can spend, I think, a week or even a month to discuss all these reasons, but of course, the main problem is usually that cultural issues, what is the role of the banking system, and it's all the same here in Central Europe than in Western European countries. And many people think that we cannot build such a capital market that is in the US because of all these cultural differences. So it doesn't make sense at all. But if you take a look at Sweden, I think that is a very good example that it can be built, even such a small country like Sweden that has 10 million people at all in a country. So really, really a small country, and still have a very vibrant capital market. And if you take a look at what was the main success factor in Sweden, of course, there are many, but the most important is how they built up the capacity of the local investors. Everything depends on the strength and the capacity of the local households. Because if you take a look at how much assets owned by the households in Sweden, one single citizen in Sweden has, in average, 165,000 euro financial asset. In Poland, it's 20,000 euro. So even if we can turn all these financial assets in Poland into securities, equities, you cannot compare what is happening in Sweden. In Sweden, the total securities market investment per capita is 100,000 euro. In Poland, it's 4,000 euro. So it's very difficult to compete with, and the secret behind that, it's not a secret, actually, that they started to build a capital market 50 years ago. I mean, there was a capital market before, but they made some measures to support, to push the people to invest more on the capital market, and it was 50 years ago. So we need time and patience, and that's the big challenge, because all these measures should be done by the policymakers, governments, and to convince them to make such a long-term steps, that's very, very difficult.
Time and patience are indeed critical, I'd agree. That being said, the policy building blocks, I think, are equally integral. And I'd like to turn to Maciej, who's had some experience actually within government shaping the policy and the texture and the fabric of policy in this region. May I ask your point of view on the building blocks, really step by step, the areas that corporates can turn to finance themselves, what they are, and how we can further develop them. And I think we'll touch on various modes, but if you could look at both the public and private side, I think increasingly there's a discussion of which is most critical and how do they interact here currently in Poland.
Okay, thank you for this question, and thank you for inviting me here. Well, probably we all agree that by and large this framework for capital market, the institutional framework for capital market we have in place here in these countries, and by and large, I mean, we have stock exchange, we have financial supervision authority, etc. And basically these institutions are in good shape, and nothing should be done more about that. Maybe there are some, for instance, the real estate investment fund, or some minor changes should be added. But this morning we have heard that institutional aspects are very important, and institutions are crucial for development, but also the trust. And I believe that we have carried out a couple of years ago the investor relations studies, and I think that if we ask why, of course, the wealth is major aspect, a major factor that the Poles do not invest in via capital market, but also the credibility of our stocks is not very high sometimes, because the investor relations of our corporations are not very high sometimes. So to increase the credibility of the corporations listed, the public corporation has to be built over time and has to be improved. And I think that if we don't have really strong trust among the investors, the potential investors, it would be relatively hard to really have the development of capital market in future. So sometimes we think only about the institution, but also the trust among the potential investors is as important as the institutions as such.
Absolutely, and building a credible company that knows how to interact and be appropriate to public investors is very important, but that's also a journey, and building that mentality within the corporate, I think it takes a village. There are a lot of different parties engaged in that. So I was thinking to turn back to Piotr and ask a little bit about those steps towards the public markets. Where are we within Central Europe in the VC, PE development? Is there more that we could be doing in order to create a stronger culture there that might in the end result in stronger companies on the public market?
Thank you. I mean, that's a very important question. It's very close to our heart at the PFR.
Yes.
As PFR is the largest institutional investor in the private equity and VC space in Poland. So actually we help to create the entire market in a way. The point is that I mean, this market needs to be addressed at very different stage. It's very important actually in sort of creating a well-functioning ecosystem for further IPOs at the Warsaw Stock Exchange and beyond, at other stock exchanges too. So you need to have a vivid and strong VC and private equity community to kind of accomplish the next step, the IPOs. So unfortunately, when you look at the numbers and when we compare like the size of the private equity market in Poland, it's relatively small in comparison to probably most of the European markets. So when we look at the numbers, like the EU average is around 0.5% of GDP. So this is the value of the private equity market. And Poland is like 10 times less than that. Then even the CE average is at, if I remember the numbers correctly, it's 0.07%, whereas Poland is 0.06%. So it's even less than CE. So we need to further strengthen the market to create like a vivid environment. And then we need to address it at a number of steps. So first of all, the entire mechanism of transforming research into business ideas needs to be reinforced. Secondly, the acceleration needs to be reinforced. Thirdly, when you look at the fundraising structure, you learn that like in 2023, most of the fundraising were raised from either government institutions or multilaterals. And then you lack investors. You don't have that many investors from outside Europe coming into the region. So definitely some, let's say, the attraction of the market to do further fundraising and to bring in new investors is to be improved.
Attila, I believe the EBRD have been active partners of both VC and PE funds for many, many years, and they've seeded a number of funds. Where do you see the obstacles to having those really take off? Obviously, your capital from your institution is critical. How do we bring in more private funding and get those smaller funds to genuinely take off so that we can accomplish what Piotr is suggesting?
I think everything leads back to the main problem, how much capital is accumulated in these regions, because it's not necessarily we are talking about direct investments from the households. No, that's not the way how it is done. Usually it is done through collective investment schemes, and their role, pension funds, investment funds' role in the VC market is really, really crucial everywhere. So everything depends on that. And even if we take a look at, again, Sweden, because that's the role model for everybody right now in Europe, it's not that people are investing in equities directly. Now, if you take a look at the shareholding structure, the direct investments from the households into the listed shares in Stockholm, for example, it's pretty much the same level as in Poland or in Hungary. But through the investment funds and pension funds, you cannot compare. And that's the same also for VC and private equity, because they provide the money for these funds. And why we need these regional players, because of course there are global players, huge global players who are pretty active in VC and private equity, but in this region, the regional investors are much more open invest in the region, so this home bias is pretty much there, and they are much more ready to invest in smaller companies. Because the global players, the main problem is that the small means totally different for them than for in this region. A small company for a global player is a blue chip, a big company here in Poland or in any other countries in the region. For us, a small company, for them is a micro or even a company they cannot see on the maps. And that's a big difference, I think. So we need the local and the regional players also in the VC. And on all aspects of and all pillars of the capital market, and of course private equity VC. It's very important because they provide the pipeline, majority of the pipeline of the public capital markets everywhere in the world.
And Attila, may I stay with you for a moment, because you've been working with many different countries across the region. Some have had successes in various areas. Cooperation and best practice sharing across the region. Is it an optimal point, or can we do more to take the successes of some of the larger markets and extrapolate them to the smaller? Or are there certain practices that are just too country specific to be relevant? What can we do on that front?
I think the capital markets are really small. I don't think it's a real big problem to share this knowledge, and it was never an obstacle, to be honest. We are so close to each other from cultural perspective. Whatever happens in Hungary, in Romania, or in Poland, everybody knows, and everybody can decide whether it is applicable for that country. I don't think it's really a problem. Of course, there are problems still on the fragmentation problem, but we will come back to this topic later. And maybe what we can say that on the regulatory side, there are some, maybe if you take a look at from a distance, it looks small problems, but they are really can be huge effect on the market, how the market works, because of course every single country has the same regulatory rule set from the EU, but still, if we take a look at how these rules are applied for these markets, sometimes we feel okay, we are in a different world, and that's I think there we can improve a lot.
Well, maybe that does take us naturally into the topic, not just of cooperation, but of greater integration and what that might mean for the region. First of all, within Central East Europe, it's on the table continuously that there might be, especially for some of the micro markets, a benefit to greater integration and centralization of the stock exchanges, for instance. May I turn to you, Tomasz, to talk about that within Central East Europe, but also how it relates to the broader discussion at the pan-European level, because there may be two very different perspectives.
Yes, exactly. And about this discussion at the pan-European level, and also you asked me previously about successes. I didn't finish the answer because also there are successes in our region, also in Poland, and I guess that sometimes it's just difficult to talk about our own successes or successes of our organizations, and so maybe I'll tell something on behalf of Piotr. Because when you read Draghi report, there are a couple of answers for those all problems. One of the answers is Capital Markets Union, or a bigger answer is to create more capital-based pension systems. And then Draghi calls to look for the best examples. And I think what Poland built over the last years with under the initiative of PFR, Polish Development Fund, i.e. the occupational pension system, pension fund, so-called employee capital plans, could be a great role model for the whole Europe. And Piotr probably will tell more about it, but I think this is also a hope for capital market, that the money from retail savings transferred through a pension system will then go to capital market and finance the economy. So that's one success story and success example. And another one could be an initiative by EBRD that I don't know whether I can tell the secret.
You can, of course.
Will be announced. Will be announced in few days' time. We are also part of this initiative. Is the initiative about the cooperation of regional capital markets, because we cannot really in Europe think about one size fits all. We need to think about proportionality in some of the measures, and that some of our markets are less developed, and we need to have different measures to help them develop. And I think one of the initiatives that EBRD helped to facilitate in cooperation of regional capital markets will definitely help to build that, and also be a model how those things can be solved on pan-European level.
Yes, very interesting. With your experience from working at various international organizations, would you like to chime in on this topic?
Well, I think still we have to do our homework, meaning that, a couple of years ago the European Commission launched this project of Capital Market Union, still not completed, still a lot has to be done, and I hope that the future Polish presidency will have this project in the agenda, and we really expect to have progress in that, because if we have the same rules, the same institutional framework across Europe, then the money, the funds will flow freely, not like fragmentation like today. So I believe that we have chance after the Draghi report, after this discussion, after the speech of van der Leyen in July, etc., that the goal is there, and we can progress with this in this direction in next half a year when the Polish presidency will take out.
But how high is the risk that a decision will be taken at the EU level to prioritize consolidation of the markets in a way that would not be beneficial to the smaller ones within this region? Is the CEE perspective being fully taken into account at the EU?
Shall I start?
If you'd like.
Yes, well, but let me start with something else.
Okay.
So, I will disclose a couple of details about let's say, the pension scheme that was mentioned by Tomasz, because I hope that Attila will disclose some details about the new EBRD project. So, we do see PPKs, or the third pillar that was created partly by the PFR, as a very important part of a contribution to sort of increase the national savings. It's not ideal, but it's in a way a very useful tool to kind of systematically build up the pool that could be converted into investments, or few investments. Still, the pool is very small. It's like almost 30 billion zlotys right now. So it needs to grow more to be visible. Secondly, the pool, probably we can enhance a bit a risk-taking element in the overall investment distribution. Probably we could find an element that it would help us to increase innovation financing out of this pool. So there are some issues that we could also work further on, and actually we exchange on a regular basis. On the other topic, on the sort of the question of integration, I mean the region is very I would say extraordinary, and Poland is even more extraordinary in terms of its history. So basically, I mean, we need to acknowledge the fact that in this country, every 50 years, there is some sort of a conflict that erases the capital, and then the capital needs to be built up once again. And this is like a historical pattern a little bit, which is very important to understand the sort of capital endowment of this country, low endowment. So in terms of like going further into the let's say the integration and the EU question, so Poland is right now starting the presidency at the EU, formally from January the 1st. And I think that will be a very good time to kind of raise the issue of the capital market union at the European level. And maybe it will be a good opportunity also to present the regional agenda and to show that for the region, some diversification is needed. So we need some sort of cohesion policy for, if you like, for the local markets, not to allow these markets to become invisible in a sort of united project. So, but these are the issues that probably would be very much on the agenda in the next coming months.
Perfect. Well, you alluded to something that the EBRD has potentially in its pocket. Attila, do you feel comfortable sharing any of the spirit around this particular proposal?
Yeah, I think it's very important to, because there are many confusion and I think misinterpretation, misunderstanding around capital market union or how it should look like in the capital market in Europe. Everybody, or not everybody, but many people talk about, okay, at the end there will be one single stock exchange, one single CSD, and that's all. That's definitely not the solution. So it's very important that when we are talking about integration, we want to create a much better, a much larger pool of capital that currently we have here in this region, because there is a pool in Poland, there is another pool in Hungary, Romania. We want to bring it together to have a regional pool of capital, and that way we can immediately increase the size of the capital market dramatically. And that's the exercise. But we cannot do that in a way that we kill the local ecosystems at the same time. And if we are talking about one single operator and infrastructure for the whole region, then it inevitably can lead some problems on the local side. So no, the solution should be where the integration is built on the strength, on the very strong local ecosystem. And the local ecosystem can be developed only locally. No way someone can develop the Polish capital market from London or from Frankfurt. The Polish capital market can be developed only here in Warsaw and the cities by the local players, by the stock exchange, by the local stakeholders. That's because that's their responsibility. And it's the true for every other countries. So, and I think we have a very good example how the capital market integration should look like, and that is the Baltic countries. Recently, they managed to achieve a single regional classification from MSCI. That was a very important step, because from that point, MSCI take these 3 countries as one single capital market, even if there are 3 stock exchanges, still 3 countries, but it's one single capital market, and that should be, I think, an aim also in Central Europe. It's doable. Of course, the main problem is that many people simply think that everything depends on ownership question, and the fact and how it works is hidden because all 3 exchanges are owned by Nasdaq there. But that's actually, nobody cares about the ownership structure. The stock exchanges, what matters, how the investors and the issuers see the market. And such integration can be done without any kind of consolidation or ownership consolidation. That's what we are working together with the Warsaw Stock Exchange and together with other stock exchanges in the region. And that's what we will that will go public in the coming days, that we signed the memorandum of understanding on together with 7 stock exchanges in the Central European region to create such a unified pool of capital. That will be a very long road. We all know it will not happen overnight, but that's the aim.
It's very exciting. So coming to the IPO prospects, in a previous speech from the head of the FSA, we heard about maybe some of the obstacles to actually attracting IPO candidates to the regional exchanges. But you have said, Attila, that it's critical that the local exchanges are the ones that develop this capital markets culture. Maybe, Tomasz, can I put you on the spot as the CEO of the exchange? If I were a corporate that was ready to go public, and you were to give me a pitch why I should come here to the region as opposed to going to one of the larger exchanges abroad, what are the key elements that make that attractive to me as a corporate?
Yes, well, the easiest answer typically is you should go because your competitors also went to the exchange and here they are visible. And I think that we in our regional markets, we also need those big IPOs. Even if there's a pan-European market on which they could list, we need them because they draw investors and they draw interest. So Poland needed Żabka to do an IPO in Warsaw rather than in Amsterdam. Romania, Bucharest, needed Hidroelectrica to do an IPO in Bucharest and not in New York, only in London. So this is something that we need to develop the markets. And once in Europe, there's of course lots of talk about accelerating capital markets union. This should be thought as accelerating both pan-European markets, but also markets in the region, because we need them both. One pan-European market may cater for 1,000, maybe a bit more companies. But European economy is about mid and small cap companies. And also most of the citizens, they work for smaller companies. So we need also to have markets, capital markets, on which those companies can finance themselves. And those markets have to be very efficient. Smaller, even the largest company in Poland is below 200, is in the 300s in Europe. most of those companies that we think about right now, which are candidates for the IPO in Poland, they'll be just too small, too tiny, too micro for pan-European market. So we need a capital markets in the region. The question is whether in each of the cities, I think that yes, why not? If we will do an initiative which will combine the asset pool, we should have a good and vibrant market in each of the cities in our region. So that's also important to take into account, because we need to have a efficient financing for growth, and growth in Europe is still driven mainly and will be for the coming years for mid and small companies. But here the most important is innovation. We need, as Europe, we need more innovation. We need more investment, and innovation is driven or is financed by capital markets, not by banks. So here there are lots of really effort to be done in terms of changing the landscape, also regulatory landscape, to make it easier for smaller companies to finance themselves for capital markets. And what we are talking here about the need to make the also regulatory changes and regulatory requirements proportional. This is what was in the Draghi report. Draghi calls for 25% reduction in reporting requirements across Europe, and 50% reduction of reporting requirements by small and mid companies. So that's a big call. Yes. And how will Europe behave and answer this call remains to be seen.
Yes, very interesting. I will just talk briefly, come back to the pitch for the companies, and I understand absolutely the mid and small cap companies need to be local. This is clear. But for the larger companies, is there still a place for dual listings and GDRs the way there was historically in the region? Or is that a thing of the past? And I open that up to everyone, anyone who has a strong view. Attila.
I have a quite strong view on that.
Yes.
So, before joining EBRD, I worked for the Budapest Stock Exchange, so I can help Thomas to build up the pitch for a local company. Why to choose the local market? I think there are a couple of examples in the past, and if you take a look at the statistics, I think there are not so many companies that were really successful in dual listings, but there were many failures, but where the companies did not find the market outside the home market. 25 years ago, we always used the example of Nokia.
Yes.
That was one of the largest company in Europe at that time. Of course, the capital markets were totally different, but it was listed in Frankfurt, in London, in New York, almost everywhere, besides the home market, that was Helsinki. But the liquidity, 70% of the total liquidity was in Helsinki, on the home market. Okay. Today, I have another example. Let's take a Lithuanian company that went public 2 or 3 years ago. 25% of the IPO was on the local market, 75% of the IPO was through GDRs in London. After a year, almost all the GDRs were transformed back to the original share, and the trading is fully on the Lithuanian market. That's a very tiny market. We cannot compare the London and Vilnius, but still, that's the place. Why issuers are listing their shares? Because the investors require them to provide secondary market liquidity for the shares. So they need to select that market where the highest secondary market liquidity can be achieved. And that's still the home market.
Yes. Very fair point. We talked about pension funds and the institutional building blocks for capital markets, and someone, I think it was Piotr, mentioned briefly retail as part of the picture to come. Can we talk a bit more about the importance of retail and perhaps also the technological ways that retail can get access to the markets? Is it vastly different in Central East Europe versus what we see in the US? Do we need to go towards the IT developments and the patterns that we've seen in the States in order to make retail really a robust and dynamic part of the broader capital markets? Piotr, would you like to take a stab at that one?
I'm not sure if I can add actually anything of particular interest on retail investors. I would rather turn to
Thank you.
Let's give it to the man with the ribbon.
I just couldn't wait, for this answer.
Sorry, I didn't read the ribbon.
Yes, as some of the listeners here know, we as Warsaw Stock Exchange, we are about to present a new strategy. And retail investors, how to attract them will be the core of the strategy. We really need retail investors because they, well, this is where the money is. And when you ask me about the pitch, yes. My pitch to the corporations will be come to the market because we have investors, we have capital. And the capital needs to be built from institutions, but where liquidity is retail. Yes. So in retail, we need to have, for retail to be attracted, first we need to have good performance, i.e. the retail investor needs to be sure that they can, well, make returns comparable to some other assets, including real estate, which has been very popular in Poland. But also we need to have a good product and we need to have a good way of accessing those products. So we are working on the various initiatives in terms of product development. A very popular product for retail investors are so-called ETFs, exchange traded funds. Which are booming in the States. Right now in Warsaw we are developing the offer. We have recently announced a promotional scheme that will charge zero brokerage houses to offer and to sell the ETFs listed on the exchange. So that's a part of the solution. Better offering. One of the products which are very popular in other markets, which are not existent yet in Warsaw, are so-called real estate investment trusts. And this is the way to access real estate returns by investors who, from various reasons, will not invest to buy a flat or an apartment or a house. So I hope that first REITs will be listed in Warsaw hopefully next year even. We'll see. And this will, together with EFs, together with more promotion, I hope that it will bring retail investors to our markets because it's so important. It's a big building block, as you said, of the development of the market.
Fantastic. So there are some exciting developments occurring. Clearly, we do need patience. That's still part of the game. But there are obviously some dynamic proposals and some action that are coming to the fore. Maybe just in our final moments so that we can wrap up, I think there probably are still additional regulatory and policy changes that could come to strengthen the climate for Central East European capital markets. And I would like to ask each one of you to give your single strongest recommendation for what could be done differently, done more of, in order to help the markets thrive. So if I can start with you, Maciej, what's your view?
Okay, thank you. I think that from the point of view of insurers, the most important part, because basically the capital market is to provide capital for development of corporation, basically for insurers, and we are facing the energy transformation, and once we don't have the clear perspective how this energy transformation will be done, there is much more difficult from one side for the corporation to provide the perspective and the investment plans, and then to go for the capital to the market. So I believe here is the one of the major obstacles for the companies to look for capital at the capital market.
So we need to elucidate the
because the amount of money which will have to be spent on these projects are enormous, really.
Yes, absolutely. Tomasz?
Yes. So how do you develop capital markets that's needed? I think that the first is institutional investors. You need capital, and here not only the funds which are trading on the stock exchange, but also, as Piotr mentioned, private equity in VC ecosystem. This is very important. Then retail investors. For retail investors, also something which really attracts them is tax incentives. So this is something that we haven't really talked about, but it could be very important, especially when there's no really equality between the treatment of various investments, for example, real estate versus capital market investments. And then the whole ecosystem, strong brokerage houses, strong investment banks, good rules, good corporate governance standards, and then when you have it all, and when I meant investors, starting from domestic investors, you will attract capital, foreign capital, and then you really can think about developed and growing capital market.
Fantastic. Attila.
Yeah, there's the famous Wall Street saying that shares are not bought by investors but sold by the brokers. And I think it's really true. And the major problem with the European regulation today, I think, is that compared to the US, in the US, the whole system is built on the transparency and trust, meaning that the regulators trust the decision of the individual investors, because that decision is made by the full transparency. They have all the information that they need, and they can make an educated decision. And that's all. In Europe, the regulatory system does not trust these individual decisions, so we want to protect the investors from their own decisions. If you take a look at, for example, the best execution rules, or how a simple brokerage company can make investment advice to a private individual. It's not that the investment advisor tries to convince the investor to buy shares. No, the investor should convince the advisor that he can buy because he knows what is it about. So it's totally different approach. And until we sort this out, it's very difficult to build a vibrant market.
Very interesting. Interesting. And as an investor, please have the final word. What is your number one recommendation?
Well, 3 sectors I have in mind, because I was thinking, let's say, I was thinking throughout the last couple of minutes of my favorites here. So first of all, I think that let's say, all of the ecosystem for supporting innovation is super important, and we need to kind of enhance in a way to mobilize more financing here. So, and this is like the entire stage from startups to late private equity. That's very important. Secondly, what Maciej said about the climate transition, and I can say for Poland, at least, it is relatively underdeveloped. So like the instruments, they are on one hand right now pushed by the EU regulations and the reporting regulations, but then on the other hand you need to have understanding, and on the investor side or on the issuer side, that enhancing a typical issuance with a sort of green SLB or whatever label,
yes,
which is a true label, not greenwashing,
yes,
would enhance actually the issuance prospects. And the third regulation, I think it's important for Polish market, are REITs,
yes,
which are not there. And we would very much like to have them on board, especially from my perspective, because we have a property branch of the PFR. So this is very much expected. And
maybe a good example of sharing best practice across the region where we've seen it successfully, for instance, in Greece. Perhaps that is an argument for more collaboration and discussion across the countries.
So I know what should be one of my first pitches. I should go to Piotr and say, your REIT should be one of the first to list it on the Warsaw Exchange. Piotr will come.
That's what we can agree upon.
Wonderful, all eyes on that. I'm very encouraged by the fact that you have diverse backgrounds, but there's alignment and I would say general enthusiasm for the future. So thank you so much for sharing your views. Thank you so much for sharing your premises here at the Warsaw Stock Exchange. And I hope everyone found some food for thought in the discussion. Thank you.
Thank you.